Hey, what's going on? In today's video, we're going to talk about the best mortgage programs for first-time homebuyers in 2025. If you're thinking about buying a home, you're a first-time homebuyer, you're not sure where to start, definitely want to jump in and pay attention to this video. So let's just go ahead and talk about it. What are the best mortgage programs available for the first-time homebuyer? Well, the thing that you need to understand is that each mortgage program has a different type of customer that it is designed for. And so, most importantly, when you're picking the best loan or the best mortgage to use to purchase your first home, it's really going to come down to your personal situation. It's going to come down to things like your credit score, what type of down payment you have available, how much your income is, where, all those different things are going to play a factor in which loan program you're going to want to try and get approved for. But I'm going to go ahead and rank them in what I think, in my opinion, is the best order for most first-time home buyers. And so, number one, the number one program for first-time home buyers is going to be the FHA loan. The FHA loan is backed by the federal government. You don't get the loan from the federal government. You get it from a mortgage broker like me, but the government insures the loan. And so the reason why that's healthy or good is because if you get an FHA loan and you default on it, they're going to pay the bank back via the mortgage insurance. The bank will have to jump through all kind of hoops, but that's in theory how it works. And so what that means is that you, as the first-time home buyer, get to purchase a home with a much lower down payment and a much lower interest rate than you probably would have otherwise qualified for. The FHA loan is only going to require you to have a score of 580 or higher, and you can put 3.5% down. Now, like with any loan program, the better score you have, the better your terms are going to be, the easier time you're going to have, and the easier it's going to be for you to get pre-approved. If you don't have that 580 credit score, if it's lower than that, we can actually help borrowers with a score as low as 500 if they have 10% down. So obviously a much larger down payment. Most first-time home buyers are not putting 10% down, but 3.5% down is huge. And the reason why FHA is so popular is just because of how flexible the program actually is. They're okay with past credit issues. They're okay with things like collections. They have the highest debt to income ratio, which if you're not sure what that is, we have a video on the channel where we talk about that. Basically, it allows you to qualify for the most amount of money. So people who may have higher debt or lower incomes, it becomes a pretty good program for them to qualify for. They're also super flexible with things like bankruptcies and different things like that. They have the shortest waiting periods of any of the loan programs. But even if you don't have terrible credit or bad credit or just okay credit, even if you don't have a lot of mistakes on your credit, it can still be a great program because the interest rates are typically so much lower than conventional loans. They're going to be a lot more competitive for the first-time home buyer in general, unless you have a very high credit score and a very large down payment. FHA loans are typically going to be the way that you want to go because they are so flexible and because they have made moves to reduce the amount that the PMI costs and different things like that. And so that's why it's our number one. It's probably the most common and the most popular loan as well for first-time home buyers, is going to be that FHA loan. Hey, it's Channing. Do you enjoy my videos? I'd love to work with you. I want you to go to workwithchanning.com and you can book a call on my calendar where I will walk with you personally one-on-one to help you with all things home buying, all things home refinancing. If you're in the market or you just have questions, you're not sure where to start, go to workwithchanning.com. It'll put you on my calendar and we can have a great conversation and get you on the right path to purchasing or refinancing your next home. Thanks so much. The DTI requirements on FHA going to be around 50%, but for some people, you're going to be able to go up to like 56.9% debt to income ratio. Again, that 3.5% down payment. Again, you can qualify starting with that 580 credit score. The big thing is, and this is with any loan program, not just FHA, if you currently have accounts that are past due or you've had a lot of late payments, you're probably going to have a difficult time getting approved for a loan because you're probably going to be a manual underwrite. Again, we have a video on the channel where I talk about that. But you're probably going to be a manual underwrite, and those late payments are going to make that really, really, really difficult for you to qualify. But other than that, if you're currently up to date on your bills or you've been paying them on time, they're going to be super flexible. It's why it's my number one recommendation. My second favorite first-time home buyer loan, and this really is going to depend on what area of the country you're in. We're in Louisiana. A lot of the state qualifies for it. By the way, if you're in Louisiana, I'd love to work with you. It's where we're licensed for now. If you're in Louisiana, the USDA loan is awesome. The USDA loan is awesome in a lot of places. The only places where the USDA loan can kind of be tough, and it's really just a matter of how far you're willing to drive to work or different things like that, is in really large cities in metro areas. The reason why I love the USDA loan, and honestly, I was tempted to put it number one. It's just that for maybe many of you watching, it might not be an option for where you need to live, is because it doesn't require a down payment. So the USDA loan is a no down payment program. We have quite a few videos on the channel where we break down that loan. Actually, some of our most popular videos on the channel are the USDA loan, but there's no down payment. It has a technically there's a 580 credit score requirement, but you've got to jump through a lot of hoops to get one if your credit score is below 640. So lenders will often say that you're going to need a 640 credit score or higher to qualify for that no down payment loan. The beautiful part about it is that 97% of America, in terms of the land, qualifies for this loan because it does need to be a rural area. USDA defines a rural area, last count, as 25,000 or less people typically. So many suburbs, many small cities are going to qualify for this. And so even if you live in, say, a larger area, if you're willing to commute a little bit, you can often, number one, usually the further out, the cheaper the homes are going to be. And then you're also going to potentially qualify for that no down payment. So USDA is a little bit different than some of the other loan programs like FHA and conventional, where they're going to have loan limits, meaning you can only borrow X amount with those particular programs. FHA actually has USDA rather has an income limit. And so that's going to vary between areas, but it's over 100,000 typically, as long as you have like 4 or more people in your household, and it does count the income of everyone in your home. And so that they don't have a loan limit. You can technically borrow as much as you want, but that income limit is going to kind of restrict exactly how much of a loan a person could get. But it's a great program. It comes with also very low rates. Typically, FHA rates and USDA rates are pretty much the same. If someone tells you different, then you probably want to shop around. There may be a small variance, but there shouldn't be this large variance on a normal occasion. The PMI on USDA, they don't call it that. They call it MIP, Mortgage Insurance Premium, is the cheapest of all the loan programs outside of like putting 20% down on conventional. USDA is just a really good program. It's one of my favorite. We're really, really good at them. So if you need zero down and you've got fairly okay credit to really good credit, and you think you might fall within the income parameters, you should definitely check out the USDA loan because it is a great program. I'll put some links in the description too on how you can check your eligibility with location to see what areas might qualify. But again, if you want help with this, we'd love to help you. Just go to workwithchanning.com and I can walk you through the basics of that. Number three, first-time home buyer program is going to be conventional loans. Now you might say, well, didn't you just say that conventional loans aren't always great? It's true, they aren't. But for those of you that have protected your credit, you've got great credit scores, you've got good income, and you have some down payment, the first-time home buyer program is going to be great for you. There's also a segment that conventional can also be really good for, and that's folks with high credit and lower income. Now, you do need to have some down payment funds, probably some closing cost funds saved up because USDA and FHA allow the seller to contribute up to 6% of your closing costs, which is more than enough usually to cover all of them. But with conventional, it's only 3%. And so you usually will have some out of pocket there depending on your area. We live in an area where insurances are really high. In Texas, taxes can be really high, right? So it really depends on your area. But if you're going to go that route, you do need to have some money saved or be getting a gift or something like that. But if you have good credit and you're on the lower income side, there are 1% down programs through some of the lenders that we work with where you pay 1% and they give you a grant for the other 2%. And then there's the traditional just 3% down where you just put 3% down. If your credit's good, you're going to get a great rate, especially if you fall into the home ready, home possible guidelines, you're going to get a really, really good rate. And it's going to be one of the better rates you can get because they remove all of the lenders call this pricing adjustments from your interest rate, and so it rips all that out, and it'll give you a really good deal. But even if you're not low income, let's say you have a larger down payment, 10%, 15%, 20%, whatever the case is, and you have a higher credit score, you're probably going to look at a conventional loan. And the main reason for that is larger down payment, good interest rate, and the main difference is that with conventional loans, the PMI does eventually come off of that loan. But here's what we also know is that most people end up refinancing when those opportunities arise. Not a whole lot of those at the time of this video, but when they do arise, let's say if you did have an FHA loan, you can always refinance later as long as you're still qualified and all that stuff. We're not talking about free refinances or any of the gimmicks that people often use to try to trick you, but you can oftentimes refinance. But that's why a person would go with a conventional loan. And so those are my top 3 programs. The only one that I really left out was VA loan, and that's for veterans only. So if you're a veteran or active duty, just get the VA loan. It's going to make the most sense 9 times out of 10. We have other videos on the channel where we talk about the VA loan. Don't apply for any of these other loans if you're eligible for that VA loan. Great rates, no PMI, no down payment. Enough said, right? Like it's an amazing loan. Those were the top 3 though. Now, what about, you're probably thinking like, Channing, what about like down payment assistance and all that? So here's the thing about down payment assistance is those programs partner with one of these 3 loan programs that I just told you about. So you're still going to get that FHA loan. You're still going to get the conventional loan. You're still going to get maybe the USDA loan. Those are fewer and far between for down payment assistance, obviously, because it doesn't require a down payment. But the other 2, the down payment assistance, are going to be tied to those loan programs if you need that. Now, you will 9 times out of 10 pay out pretty much a higher interest rate, and then you're either going to have a second mortgage attached to your home that you're paying back, or you'll have a second mortgage that's attached to your home that you're not paying back, but you would have to pay back if you don't live in the home for 5 years or something like that. So that's kind of how down payment assistance works with the different loan programs. So if you're a first-time home buyer, I hope this video was helpful to you. If you have any questions about the loan program, definitely drop a comment. Again, you can go to workwithchanning.com and I can help you with any questions, walk you through any scenario. It'll take you right to a place where you can book a call on my calendar. Otherwise, I hope you have an amazing day. Hey, thanks so much for checking out this video. Definitely make sure you subscribe, comment, do all the stuff. It really helps us and it'll help you. Also, check out the video that YouTube is recommending for you right here. Let me know what you think. I'll see you over there.